do you sell? How do you sell? How do you exit?
Well, again, uh, using the differentiation of this asset class, and your point about the emotional attachment, if you buy a piece of Mona Lisa, for the family, you probably don't or shouldn't have a reason to sell. You've got a piece of Mona Lisa. Everything else is just an ordinary asset that can be replaced, right, or depreciates. So first thing is, it's a long-term investment horizon from our perspective. We're not actually trying to sell anything. Now you could say create some circumstances why you might want to sell, but no. I mean, if we've gotten you a piece of the Rolling Stones, the Who, Kinks, Don't Stop the Music, and all these things, what's the purpose of selling and putting it into a bank account to redeploy it somewhere else? It's supposed to be an alternative, non-correlated asset, that pays an income for decades. So that's the first as far as positioning. It's not like, you bought a short-term asset like Bitcoin or something at one price and you want to sell it and trade it. That's not this asset class. The underlying asset class is fundamentally illiquid anyway. From the point of view of our goal, the primary plan is to create a public vehicle. So we already have over 300 accredited investors as shareholders. The idea is to list at a bigger size in a better market, because obviously the markets are quite weak right now. But let's just say in 2025, interest rates are starting to go down again, and it's a great idea to be the first public music royalty company with the potential of going viral. So if you're talking about somebody who wants to sell their shares, then that's ideally the place to go for the exit. Hopefully that answers the question. In the short term, we've had the odd shareholder that wants to sell, so we've either done a corporate buyback or arranged a trade with another new investor.
Got it. Okay, very clear. So let me just sum that. So essentially, if you have a trophy property which just constantly give you the cash flow that meet your criteria, you're not thinking about selling. So, so if people do crave for that cash flow, it's good to hold on and just get constant cash flow, so it pays back original principal and then keeps paying on top of that year after year. Now, if somebody wants to liquidate and get out, then there's you guys are, I guess, planning for going public. So
that's right.
Potential. Okay,
that's right. Mm-hmm. And of course that's a debate on various levels. But let's just give you one small example. So we've grown from, call it, $250,000 in dividends to $500,000 to $1 million to over $2 million, and now in the run rate of $3 million. So if we were at a $5 million dividend, because that's our primary metric, our mandate, our goal is to flow through the streaming income in the form of monthly dividends. And if we're at a $5 million dividend run rate to shareholders at 5% as a public company, then that means the company's worth $100 million. So that could be our target for 2025.